Good to have you back on the programme with us, Russ. Now, US Federal Reserve Chairman Jerome Powell signalled cuts to interest rates, but didn't mention when and by how much. What are market expecting?
There's a Federal Reserve meeting on the 18th of September, and even before Mr. Powell's speech, the only debate was whether it would be a 1/4 point cut or a 1/2 point cut to 5.25% or 5%. And by the end of the year, financial markets think that the Federal Reserve will have cut by a full percentage point to 4.5%. And by the end of 2025, the current expectation is 3.5%. So a succession of relatively quick fire cuts now expected and already priced in by financial markets.
Right. Now, oil prices hasn't been as affected as much as we saw during other crises. How do you see this recent escalation in the Middle East impacting the oil markets?
I mean, it has clearly created a little bit of tension with traders on what could be a relatively quiet Monday, because it's, for example, a bank holiday here in the United Kingdom. I think overall, the concern for the oil price of late has been that supply continues to outstrip demand growth, with America partly leading the way, continuing through shale, despite the Biden administration's opposition to that. So the economic fundamentals at the moment seem to be slightly against oil, dare one say. But yes, any tension in the Middle East always has traders running for cover.
Right, let's have a look at the US dollar now. It's fallen to its lowest level in around 13 months. Why are we seeing this at the moment?
I think, again, it's a tricky one. Currencies are not such partly reflect the interest rate gap between different countries. So if one country is offering a higher interest rate than another, its currency may attract more capital as that seeks better returns. But it also reflects changes in the expectations of how that gap will be. So if America cuts interest rates more quickly than expected, that could weigh on the dollar, particularly if the UK then cuts rates more slowly than expected. So this may be partly explaining why the DXY index, for example, the dollar basket that tracks the American currency against a range of different currencies, that's down at 101, near a 12 or 13-month low, because it seems as if Mr. Powell and the market, or Mr. Powell is hinting at cuts, and the market is moving ahead of him and expecting a very quick series of them.
All right, Russ Mould, Investment Director at AJ Bell. Thank you very much for that insight.
Thank you.